The Great Wealth Transfer is set to rewrite the rules of economic growth, and the top impact no one expects is hidden at number 1. Stay tuned until we hit the number 1 surprise that could change everything. Imagine a wave of retirees suddenly splurging on experiences rather than goods, instantly reshaping demand across industries. As baby boomers and Gen Zers transfer their assets, research suggests a notable pivot toward travel, dining, and digital services, driven by a desire to enjoy earned wealth. This shift pressures traditional retail while boosting sectors like hospitality and streaming platforms. Analysts estimate that discretionary spending could rise by several percentage points, influencing overall GDP growth patterns. Yet the story doesn't end there. The next impact dives deeper into real estate dynamics, where changing preferences start to reshape market fundamentals.
Surprisingly, the wealth handoff is nudging the real estate market towards suburban and luxury niches, as older homeowners downsize or relocate to climate-friendly areas. Data from housing analysts indicates that this migration could free up prime urban inventory, lowering price pressures in some metros while inflating demand in Sun Belt regions. Moreover, the influx of capital into second homes and retirement communities is expected to stimulate construction and related services, contributing modestly to employment figures. The ripple effect reaches mortgage lenders, who must adapt to altered loan profiles. Up next, we examine how small businesses feel the tremor of this massive wealth redistribution.
According to recent surveys, small businesses stand to gain a fresh injection of capital as heirs seek to preserve family legacies or launch new ventures. This infusion may translate into higher hiring rates, expanded product lines, and increased local economic activity. However, experts caution that not all transfers translate into entrepreneurial action. Some families opt for professional management or passive investment, which could dampen the expected boost. Still, the net effect appears positive, with a modest uplift in small business contribution to GDP projected over the next decade. Next, we explore how this wealth shift could reshape stock market dynamics.
Few people know that the Great Wealth Transfer could subtly recalibrate stock market volatility as new investors enter the arena. As retirees and their heirs allocate portfolios, there may be a surge in demand for dividend-yielding and socially responsible equities, potentially driving up valuations in those sectors. Conversely, a heightened focus on capital preservation might increase the appeal of bonds and defensive stocks, tempering overall market exuberance. Financial commentators estimate that these trends could modestly affect market breadth and sector rotation, influencing broader economic confidence. Following this, we turn to the tax revenue implications that could reshape public finance.
Hidden in the background, shifting wealth will likely reshape tax collections, as estate taxes, capital gains, and income tax brackets adjust to accommodate larger transfers. Policymakers may respond with reforms aimed at balancing revenue needs against fairness concerns, potentially altering the fiscal landscape for decades. Some projections suggest that without legislative changes, governments could face shortfalls that affect public investment in infrastructure and education. Conversely, targeted tax incentives might stimulate reinvestment of inherited assets, offsetting revenue gaps. The next item looks at the surge in philanthropic activity that often follows large inheritances.
Deep beneath the headline numbers, many heirs channel newfound wealth into charitable foundations, aiming to leave a lasting legacy. Research indicates that philanthropic contributions could rise significantly, especially in areas like education, health, and climate action. This influx not only supports nonprofit operations but also spurs social entrepreneurship, creating jobs and innovative solutions that feed back into economic growth. While the exact magnitude remains debated, the trend underscores a growing preference for impact-driven wealth deployment. Up next, we examine how labor markets might feel the pressure of this generational shift.
Unprecedented numbers of retirees staying active or re-entering the workforce could reshape labor supply dynamics. As older professionals leverage experience and capital, they may take on mentorship roles, freelance projects, or part-time positions, potentially easing skill shortages in certain sectors. Simultaneously, younger workers might encounter heightened competition for senior roles, prompting a re-evaluation of career pathways. Economists estimate that these patterns could modestly influence wage growth and productivity trends, especially in knowledge-intensive industries. Next, we explore how wealth concentration could affect broader economic equality.
Experts warn that the transfer could exacerbate wealth concentration, as sizable estates often remain within a narrow segment of families. This deepening of the wealth gap may limit broad-based consumer spending, potentially dampening aggregate demand. On the other hand, concentrated capital can fuel large-scale investments in technology and infrastructure, which might offset some negative effects. Studies suggest that the net impact on growth hinges on how much of the transferred wealth is reinvested versus held in low-yield assets. The following segment delves into the rise of intergenerational entrepreneurship.
Data shows a growing number of heirs are launching startups, leveraging inherited capital to pursue innovative ideas. This trend can stimulate job creation, diversify industry portfolios, and introduce fresh competition, all of which are beneficial for economic dynamism. Moreover, family-backed ventures often enjoy longer runway and resilience during early setbacks. However, success rates remain comparable to typical startups, emphasizing the importance of sound business models. The entrepreneurial wave thus adds another layer to the economic ripple effect of the wealth transfer, setting the stage for the final, most surprising impact.
Finally, policymakers are poised to react to the massive generational wealth shift with new regulations that could redefine the economic playing field. Anticipated measures include revisions to estate tax thresholds, incentives for reinvestment, and stricter reporting requirements for offshore holdings. Such changes aim to balance revenue needs, promote equitable growth, and prevent market distortions. While the exact shape of future legislation remains uncertain, analysts agree that these policy moves will have lasting implications for investment behavior, corporate strategy, and overall economic stability. Together, these 10 impacts illustrate how the great wealth transfer is not just a financial event but a catalyst reshaping the very fabric of our economy.
We've just uncovered how the great wealth transfer is poised to reshape everything from consumer habits to policy frameworks, making the future of economic growth both exciting and uncertain. If you want to stay ahead of these massive shifts, hit subscribe so you never miss our next mind-blowing list that breaks down complex trends into clear, actionable insights. Which impact do you think will reshape the economy the most? Let us know in the comments below. And if you found this breakdown useful, give it a like to help the channel grow. Thanks for watching.